Your credit score. It feels like this secret, mystical number that controls your life. But for most people, it's a total black box. Well, we're going to change that. In this explainer, we're giving you a simple 5-step map that can guide pretty much anyone to that elite 800-level score.
But first, why should you even care? I mean, really, what's the big deal? You could just ignore your score and hope for the best, but that choice has some very real and very expensive consequences. The question isn't if a low score is costing you money, it's how much.
A low score, something down in the 500s or 600s, is way more than just a number on a screen. It's a real-life roadblock. It means getting a flat-out no for the best credit cards, the ones with all the great rewards. It can even get you rejected for that apartment you really wanted. And here's the most painful part. It means paying way more in interest on car loans and mortgages. We're talking tens of thousands of extra dollars over your lifetime. The stakes here are seriously high.
So, here's our game plan. We are going to walk through these 5 steps, one by one, in order of importance. We're starting with the most critical moves you can make today. By the end of this, you'll have a crystal clear guide to building an excellent score.
Think of this as the secret blueprint for your score. These 5 slices, they represent the 5 big factors that decide your credit rating. Right now, they're blank, but as we go through each step, we're going to fill them in, giving you the complete picture of how this whole thing actually works. Okay, let's dive into rule number 1. And honestly, if you only remember one thing from this whole explainer, make it this. The absolute most important rule is paying your bills on time. This is the foundation, making up a whopping 35% of your entire credit score.
So what does on time really mean? Well, you have to pay at least the minimum payment by the due date. But, and this is a big but, paying only the minimum means you immediately start getting hit with interest charges. And let's just kill this myth right now. A lot of people think carrying a balance helps your score. It absolutely does not. All it does is make the credit card companies richer. The smartest move, always, is to pay the full statement balance on time every single time. Your account stays current, and you pay 0 interest.
And the penalty for messing this up is, well, it's brutal. If you miss a payment and it goes more than 30 days late, it can absolutely tank your score. We're talking by as much as 100 points from a single mistake. And that negative mark? It sticks to your credit report, following you around for 7 years. That's why this is rule number 1.
So how do you make sure this never, ever happens? You build a system. It's that simple. Put reminders in your phone's calendar. Get in the habit of just checking your accounts every week or so. And most importantly, this is your ultimate safety net. Set up autopay for at least the minimum payment on all your accounts. That way, you're always covered.
All right, on to the next piece of the puzzle. This one is huge because it's the factor you have the most direct control over every single month. We're talking about the 10% utilization secret, which accounts for the next 30% of your score.
So, what in the world is credit utilization? It sounds complicated, but it's really not. It's just the percentage of your available credit that you're actually using at any given moment. You just take your total balances and divide them by your total credit limits. That's the number lenders are looking at.
This chart here lays it all out. If you're using more than 30% of your credit, lenders start to see you as a bit risky. Keeping it under 30% is good. But we're not here for good, right? We're shooting for an 800 score. And for that, the real target, the excellent zone, is keeping that utilization below 10%. The lower you can get it, the better.
I absolutely love this analogy. Think of your statement closing date, the day your bill is generated, like it's picture day at school. Your credit card company takes a snapshot of your balance on that day and reports it. So, if your balance is a little high a few days before, you can just make an early payment to knock it down. That way, when they snap that picture for your credit report, your utilization is super low and you look fantastic.
All right, our next factor is all about playing the long game. This accounts for 15% of your score, and it's the one part you can't really cheat or speed up. It's all about letting your credit age, and it is a game of patience.
The source for this explainer told a personal story that's just a perfect example of what not to do. He turned 18, but then waited 2.5 years before he got his first credit card. So now, at age 26, his oldest account is only 6 years old when it could have been 8.5 years old, aging like fine wine. That extra 2.5 years of credit history, it's just gone forever. So the lesson is clear. Start building credit as early as you responsibly can.
So, the strategy here is pretty straightforward. First, start building credit as soon as it makes sense for you. And second, whatever you do, keep your oldest credit accounts open. Closing an old card can actually hurt your score by lowering the average age of all your accounts.
That's why cards with no annual fees are golden. You can just keep them open forever, at no cost to you, letting them rack up the years and boost your score.
Now this leads us right into our fourth factor, which makes up another 10% of your score. It's all about mastering new credit and understanding what happens when you apply for it.
Okay, so every time you officially apply for a new line of credit, a card, a loan, whatever, the lender does what's called a hard inquiry. It's basically them taking an official peek at your credit report to see if you're a responsible borrower. Now, a lot of people freak out about this, but a single hard inquiry usually only dings your score by about 5 points, and the effect is temporary. It's not the end of the world, but they can add up if you apply for a bunch of things in a short period of time, so you have to be strategic. And this right here is the pro-level strategy. If you know you're going to be applying for something big like a mortgage or a car loan in the next year, just hit pause. Don't apply for any other new credit for about 6 to 12 months beforehand. This lets your score fully recover and ensures you're showing up with your absolute highest possible score to get the best interest rate. Okay, we are at the home stretch now. This is where we put all the pieces together. We'll quickly cover the last 10% factor, your credit mix, and then talk about the compounding effect that really pushes your score into the 800s.
So, what is credit mix? It's just about showing lenders you can responsibly handle different types of credit. Things like credit cards, maybe a car loan, eventually a mortgage. But, and this is super important, you should never ever take on debt you don't need just to try and improve your score. That's totally backwards. As you go through life, your credit mix will take care of itself.
And here it is, the complete picture. Remember that blank map we started with? Now it's all filled in. 35% is your payment history. 30% is amounts owed, which is mostly that utilization number. 15% is the length of your credit history. And then you have 10% for new credit and 10% for credit mix. That's it. That's the formula. No more mystery.
But here's the real secret. Getting to an 800 score isn't about being perfect at just one of these things. It's about the compounding effect. It's about consistently paying on time, keeping your utilization low, letting your accounts age, and being smart about new credit all at the same time. When you do all of these things together consistently, over time, that's what drives your score to the top.
Look, at the end of the day, your credit score isn't just a number that gets assigned to you. It's a story. It's a financial biography about your habits. And with the map we've just laid out, you now have the pen in your hand. So the only question left is, what story are you going to write?